And I guess just about everyone's worst fears on the street are out. It's spelling trade wars between China as well as the US just tonight, and that's exactly what the world markets are reacting to. There has been a huge correction taken place in the US equities overnight, reason being that the US has imposed a hefty 50 billion tariff to select Chinese imports, and this time around, this morning, China has retaliated. So, which is why you're seeing that huge correction for the SGX Nifty. And Nikunj, like I said, just about everyone's horrors and nightmares are coming true. This is exactly what the world feared when Trump first talked about the fact that he's going to slap tariffs on the steel industry. And now it seems that this is spreading across countries, and China being the biggest importer.
Well, Aisha, we can link the fear of a tariff war as the immediate reason why there is a bit of a sell-off in global markets. But frankly, you can combine any number of items that are coming together to challenge this so-called Goldilocks scenario. There were two real pillars for the current market rally or for the current market strength, both global and local. Number one, cheap liquidity, which surely has turned and which will turn more, which is having an impact on liquidity. And second, the global growth in last 12-18 months has been rather free-flowing, and global indicators are indicating that global trade has picked up. So both the basic assumptions which were driving global markets higher and equity prices higher and financial assets higher, they've got challenged. I won't like to use the word panic, but there is definitely an element of nervousness, because global markets worry that if the track record of Donald Trump and if the communication of the Republican government is anything to go by, there is going to be more confusion, there is going to be more back and forth on trade and war and on economic policies, and typically that is adding to a level of uncertainty. And we all know that, Aisha, markets, they hate uncertainty. Basic assumptions have got challenged, growth assumptions need to be reworked, and fear of a trade war at a time when global economy has just managed to recover is the last thing which anybody was anticipating, expecting, or was prepared for.
Oh yeah, indeed. And you know what's the alarming fact? And I'm going to just read out what Donald Trump, the President of the United States, has said. He's saying that he's putting America first, as always. He said that this has been long in the making. We have a tremendous intellectual property theft situation going on with China, affecting hundreds of billions of dollars in trade each year. More importantly, I think this is what needs to be highlighted. He's saying this is the first of many, and China, like we pointed out, has not taken it quietly. They've also hit back, and now China plans to slap a reciprocal tariff of $3 billion in US imports, which includes products like steel, pork, recycled aluminum, fruits, as well as wine. So it seems like, Nikunj, this is not it, and this is the start of it, like Donald Trump has spelled it out himself.
Well, we've already seen that with this entire imposition of import duty on steel and aluminum, major economies have reacted. They've gone to WTO saying that, look, the Americans are trying to violate the basic understanding and the basic principles of WTO. So I guess this is going to be this is just the beginning, Aisha. Let me put it this way, because I don't think right now any country is going to take this kind of an strong move from the Trump administration very, very lightly. They will all like to protect their own turf and their own country. So China has retaliated. You never know, the next move could be coming from which country, and in general this will have an impact on globalization. The reason why global economy has revived after 2008 financial crisis is because of globalization. I'm not saying that the heart of the globalization is going to get challenged, but surely it's going to get slightly sour. And this is a new factor which is at play, Aisha, and I don't think we've really looked at this kind of a scenario for last 8-10 years. So suddenly there is going to be a new rethinking which has to come out as to what will happen to global trade, what will happen to global economy, what will happen to all major economies, and how each individual WTO member company will retaliate. I don't have any easy answer, but the headline is indicating that as of now the waters are getting muddy when it comes to global trade war. So we'll stay with this story. Peter Cardlo joins us, chief market economist with First Standard Financial Company, and along with him we've got a good old Sandeep Tandon, who's been quite bearish from the beginning of the year that US markets are likely to fall more. Peter, morning. I want to start with you. Peter, do you think the fear of a trade war is real? Waters have got muddy and this is just the beginning?
Well, it's obviously just the beginning. We're just basically in starting in the first inning here. And of course, the markets have been nervous, and yesterday, certainly we saw a big drop in the American markets, and this is likely to continue, especially now that China has answered Trump with retaliation of about $3 billion in tariffs. And so, the question here is, how far does this trade war, how far will this go, and will it turn into a full-blown trade war, not only with China, but perhaps with other countries as well?
Right. Peter, stay with us. And Sandeep Tandon, I want to get in a domestic perspective here. This is almost hitting the nail in the dark, because last time around you knew that you needed to sell the metal stocks, and that's where the concentrated selling would come in. But today it seems like we're headed in for a very broad-based decline.
See, obviously, when you see this sort of turmoil happening in the global market, it has its own impact, okay? But with this background, I still maintain, that we are very bearish on US. And I also want to give you some perspective in terms of flow. Like right from 2009 till let's say, end of 2017, we have seen close to $3.5 trillion of overseas money coming to India, to US market. And this is one of the reasons we say there's some sort of euphoria which we have seen. And we believe that even right from May 2017, it started declining. And if we believe that even 8 to 10% of flow gets shifted out of US, that can create a massive euphoria in the Asian market. That's our call. With a lag effect of few months, I still believe that money will come to Asia, whether it's China, Japan, India, Taiwan, Thailand, all sort of Asian economies will do. Ultimately, see, market always tend to react, okay? I'm not disagreeing with this trade war. I think, yes, it's the beginning. And but I don't think it can convert into a full-blown sort of crisis, what unfolded in 2008 or something, anything like that. I think it could be a good bargaining technique from Mr. Trump itself. So I'm not worried about India and Asia in general. In fact, it could be a good opportunity to buy some of the quality names at these levels, plus minus 200-300 points in 10,000 level. It's a good way to enter the market, and all this 200 EM is a psychological level which has already broken. So it's a good opportunity to rebuild exposure.
And where do you rebuild exposure, Sandeep? Because domestically as well, India is grappling with its own issues. There's that big political overhang of the 2019 elections, especially in the wake of, what some of the state election results have been. And now with crude at 69, you've got to worry about inflation and the interest rate trajectory.
So obviously, with this background, which I have been advocating for quite some time now, the consumption stock, the FMCG or the consumption stock in general looks good. And I still don't like PSU space or altogether, or banking space in general, maybe some private sector bank. Again, the valuations are relatively rich out there. So we look for opportunity, but I'm not bearish on the metal space, because the entire metal export countries will do very well this year. And we believe the commodity prices has bottomed out, will gradually inch up only. So it should be opportunity to buy some of the commodities name. So I'm not at all bearish on the commodities in general.
Today we are discussing trade war, but about 6 weeks ago we were discussing the impact what financial financials market could have if interest rates they go higher. So what are really markets nervous about? Are markets nervous about trade war, which will have impact on global growth, or markets are nervous about global growth and US economic growth? Because if trade wars are real, then obviously global economy will slow down and the bond yields will come down and inflation will remain low. Peter, that question was for you.
Oh, okay. Yeah. Well, obviously, it's a good point you're making because, if you saw what happened yesterday in the American markets, we saw a rush to safety. And what happened? We saw yields actually come down. We're seeing an inversion of was happening just the opposite several weeks ago. And, of course, the reason for that is that if this trade war should develop into a full-blown trade war, obviously the economies are going to slow down. And so, the fear that the Fed, which, by the way, I still remain hawkish on as far as the Fed is concerned, that would reverse, and of course we'd be looking at yields that would be crumbling because of recession fear. So it's a good point you make, and I think the market's reactions yesterday were a clear message to Mr. Trump that perhaps he's going the wrong way. And so it's more or less a market that's in a protest mode right now.
Yeah, seems to be the case. Sandeep, you've talked about what you're going to buy, but assuming the worst case scenario that this trade war tariff actually pilfers through to other countries beyond China as well, what are the sectors in the wake of these developments that you would stay away from and you think even back home would get impacted?
See, India, we really don't have like you look at our export data is actually not in a great shape. Okay, so I don't think India will be affected up to that extent. Yes, China definitely. Okay, but I don't think have a bigger impact on country like India. So your consumption themes remain as it is. At some point in time, financial will also become attractive. So I'm not talking about PSU, but maybe some of the NBFC space or some of the housing finance companies. Okay, or maybe the ARCs or the mutual fund company or the wealth company, at some point in time, they will also become very attractive the way the correction has happened of 25, 30, 40% in some of these names.
Okay, right, Sandeep, Peter, appreciate your time, gentlemen. Thank you for joining us, Aisha. I guess from an India standpoint, the way I would look at things is that we've been underperforming global markets. If I look at what Dow has done, yes, on paper we can say that this is the 5th biggest absolute fall what Dow has registered, and the headline in a sense is going to make you feel slightly scary, is going to give you a very uneasy feeling at the bottom of your pit. But frankly, on a YTD basis, American markets have not come down significantly. So the first point, Aisha, is this the beginning of a turn for US markets which have been volatile? First they dropped and then they recovered. Or this is just going to be one of the routine corrections where markets would say, look, I don't think the tariff war will start. This really could be political posturing because there are midterm polls which are there. And since Donald Trump really became the president of United States because he openly talked about a trade war and protecting the American turf. So it's only sequence of news and events and how China and other countries would move. I think we will figure out whether this trade war will really be a full blown trade war or not. But from India's standpoint, Aisha, what we need to understand is that we are underperforming. Are we likely to outperform this global fall, or are we likely to lead? And I think that's the debatable point, because we are a weak market, and typically when a weak market is hit with bad news, it tends to fall more. So my sense is that we are likely to lead the fall rather than outperform the fall. So we'll talk about some individual stocks, and Siddharth will have his insights on the technical picture. But from an India standpoint, Aisha, like I said, What matters is that we need to decode whether we are likely to lead the fall or we are likely to outperform in this fall.